Welcome to the National Real Estate Cafe with Don Getling and Gino Franti, where you can get your daily dose of market updates every single day on your phone by texting NREC to the number 58885. Or you can check us out at nrecafe.com.
Way to go, Gino. Nicely done. Okay, so we've been just talking about interest rates going down. You've heard, I know you're going to hear about it a ton, that rates have gone down and that there's some opportunities. And you also heard us say, please take action today, because you're going to sit on your butt and go, hey, I got time. Rates are going to stay down. Some of the economists don't think so. First
Real
slide.
quick, I'm just going to throw this out there. If you were to refinance today versus refinancing a week ago, Don, on a $400,000 loan, it would cost you an average of $2,000 more today than it would have a week ago. So taking action is important.
There you go. Good stuff. So another thing is, do you know the difference between cost and price? So this first slide, we're talking about that basically rates have improved, and a lot of it due to the Brexit, Britain exit from the European Union. So, but a few of the experts don't agree that we're going to stay this low on interest rates. So
You know what's going to happen, Don, is, and we've already seen it, the United States is still leading the charge. When you talk to people in the U.S., the economy is robust in most places. Construction is robust. Building is robust. We just saw a great jobs number a few weeks ago. Now, granted, it was after an anemic jobs number, so there's still mixed reports out there. But when I talk to people, they're busy and they're making money, and if that continues, rates have to go up.
all right, well, a few people agree with you, Gino. Let's start off with Trulia's chief economist, Ralph McLaughlin.
Not a moron.
No, obviously. So basically, he feels that once everybody gets comfortable with all the changes in Europe, that rates will start to rebound back up. And then we got in the Mortgage Bankers Association and Freddie Mac, both think that they're going to go up a full percentage point over the next 12 months. I don't quite agree with it going up that much, because I think there's too much going on globally for us to go up that much. I'm going on a ledge saying it's not going to go up a full point in the next 12 months.
I don't think so either, Don. I think maybe a half a point is a more prudent projection, which would bring us back to where we were just before this Brexit situation.
I'm comfortable with that.
Yeah, which was a good place. We still had over 5% growth and a nice economy. You know, the main concern, the underlying economy, continues to be GDP. We don't have a good GDP. Part of that is because we have no inflation. I've been saying it for years. Without inflation, you can't have growth. And we've tried to create inflation in a number of ways, and we haven't had it because we don't have any wage inflation. So,
Bingo, I was just going to say, without wage inflation, without you making more money, you can't purchase for more expensive goods.
Unless the cost to borrow money is cheaper.
Interest rates going down, that helps a lot.
Yeah.
Okay, so we're going to show you a slide, the difference between taking action now when rates are extremely low versus waiting and losing purchasing power. This is a nice little example. I'll let you explain, Gino.
Okay, so we call this the cost of waiting. Most of the time when we do this analysis, we talk about the cost of waiting, and it's unbelievable that you look at just a small movement in interest rate, right? Here you're talking about a 1% movement in interest rate like we were talking in the projection on a very small price appreciation.
5%
right?
or so?
Which is what's being predicted for the next month or for the next year.
I think it's going to be at least that.
At least that. Well, it's depending on where you are in the nation, right?
Right.
But on average, that's what's going to happen. So you have that appreciation on an average median price home of $250,000. The price differential doesn't seem that big, right? 250 to 263. Not a large margin. You could definitely wait and pay $13,000 more for a house, not the end of the world. However, if interest rates combine with that, then it's going to cost you $239 a month, and shockingly, even worse,
$86,000 over 30 years. That's only on a $263,000 mortgage.
Yeah, double that, and when you're talking in the West Coast, and now you're talking about $172,000 that you lose just because interest rates went up a little bit. So the question to me is, and I always talk about this, would you rather pay the bank that $172,000, or would you rather have it in your retirement account?
Well, how about that example showing you that basically just a 5% increase in the sale price, a 1% difference in the interest rate, just costs you 20% more or so on your mortgage payment.
Ridiculous.
That's pretty dramatic. So the bottom line is, before prices go up and interest rates go up, because they're the lowest they're going to be for quite some time, you know that.
Interest rate more important than price.
Interest rate always more important than price. But it's time to take action. And now's the time to go talk to a mortgage professional. Just don't go online and run numbers. There's so many options out there, and there's so many things that based on your particular scenario, based on your credit, your assets, your income, and so forth. Make sure you talk to a professional so they can give you the right options. Maybe they even use the great program by Dave Savage and his crew, Mortgage Coach. really gives you good analysis.
There's no better way to analyze mortgage comparisons than there is with Mortgage Coach, because as long as we've been in the business and as many scenarios as we've seen, until you put it in there, that becomes real, right? It takes into consideration interest rate, term, reaccumulation if you're deciding to invest the difference. I mean, just the multitude of opportunity.
How much it costs to close, all that stuff is in it. So you can always reach out to us too, donandgino@gmail.com, donandgino@gmail.com. Check us out at nrecafe.com or get these sent to your phone easily by texting NREC to the number 58885.